The real estate market is changing and it's changing quickly. Are you prepared? Today, we're going to do a market update on Q1. There's mixed bag of good and bad. Make sure to tune in. Here is your fourplex market update. What I'm going to do today is track this quarter's results versus last quarter being 2022. A lot of us have heard that the real estate market is slowing down. Now, I want you to know that there's something really important that when we hear the word real estate, a lot of us lump all the real estate into one umbrella. But I want you to know that real estate performs differently in different types of properties. For example, if you're comparing single family homes, only compare to single family homes. If we're looking at industrial, that's a different type of property. There's office, there's retail, there's medical office, there's self-storage, there's hotels, there's multifamily. So when we hear that the real estate market is slowing down, let's really be specific and say, what segment of the market? And so today I'm going to talk about multifamily, and I'm going to dive deep into what's happening in the fourplex realm as of today. So last year, at the end of the first quarter, we had 17 sales. So in the city of Long Beach, there were 17 fourplexes that have sold. That was in line with what we had seen the prior years. This year, 2023, the first quarter, we've had 11 sales. So this massive decrease from 17 last year's quarter to now there's only 11. That's a 54% drop in amount of sales. Okay, what do I make of that? Well, what's happening and what is driving the slowdown in the fourplex market is simply interest. The interest used to be at 3%. You had a lot of other buyers lining up to receive that 3% because the investment made more sense and it allowed them to come in with much less down to get to a break-even point. Now, the properties haven't gone up that much for year over year. The prices are pretty much the same, and I'll cover that next. But for that same investor, let me give you an example. Last year, if you were buying a 4-unit building, say at 1.3 million, this is just a hypothetical, in order to get it to a break-even point, meaning that all the rents covered all the mortgage, the principal, the interest, the insurance, the repairs, the maintenance, all the standard stuff. In order to get it to a break-even point, meaning that you bought this property, consider it a business, because it is a business, it's pretty much paying for itself. That's good. That's a good place to be in Southern California. Not a lot of properties in Southern California, cash flow year one. Okay, I've said that on multiple videos, and a lot of you hate to hear it, but that's the truth. That's the way it is. People still make money on appreciation, not so much cash flow, and that's okay. That will continue to happen. Now, last year, the first quarter, if you bought in January, the interest rates were still really good. You could buy a property at 1.3 million, which was the average sales price on a 4-unit building, and come in around 200,000 down, okay? Roughly around that point. Well, now, fast forward a year, things have changed. Interest rates have doubled. So where before we could be low 3s, now we're in the 6s. Well, now to get a property to pay for itself, now you're having to come up with $500,000 down. So you could see the increase from, hey, I've been saving up for my first fourplex and that's going to be around 200,000, which was last year's scenario, to now I want to buy my first fourplex and now I'm coming in with $500,000. So guess what? There are a lot less people with that much money to put down and less motivated, okay? So they're less motivated for the fact that they're putting a substantial amount down, the cash flow is not there, and the interest rates are simply higher. So that has forced the market to slow down, okay? And I would expect that the market's going to continue to slow down because I don't really expect the interest rates to drop. I don't also expect them to go up either. So I do expect them to remain the same. And this year, 2023, in the world of 4 units, there's going to be less sales. Now, although today's video I'm specifically covering the 4-unit market, I would tell you that a lot of this relates to 5 units and more. And so if there's a specific unit type that you want me to cover, send me a message. I'll do the analysis. I'll be glad to do it. But pretty much what I'm covering from a fourplex market, which is a deep dive on this, you're going to see whether it's 5, 8, or 10, or 12 units, we're almost going to see the same. Now, with that being said, let's talk about the average sales price. Okay, because oftentimes we make the mistake of saying sales are down, prices are down, and that's wrong. Okay, prices are actually up in 2023. So given all that, prices are up. So last year, the average sales price in Q1, quarter one, was 399,000. So right around 1.4 million, okay? That was the average sales price closing for Q1 of 2022. Now, the average sales price is 1,424,000. So a slight increase up. If you are an owner of a 4-unit building, you're thinking, prices are up, I'm good, why should I sell? And that's a true statement, but we also know that there are life-changing situations that happen, and it might come to the point where you are tired of rent control laws. You're tired of the laws that they continue passing. You're tired of not collecting rent in some situations, and you want to sell. So what's happening? Sales are down, prices are slightly up. That's a good thing if you're an owner. I will tell you that it's going to be harder for the real estate agent to get the property sold. Obviously, we are the market leaders when it comes to fourplexes, and now we're being a little more strategic in pricing. In the past, when we would list a property, if the client wanted more than what we thought it was worth, we would go along with it and say, well, let's let the market tell us. Nowadays, depending on the motivation of the seller, I would tell you we need to price it aggressively. We need to price it where it's going to move. Again, sales are down. Sales are down for the 4 units. And so if you own a fourplex, congratulations, your property is worth more than it was last year. Shocking given everything that I've talked about, but that is the case for this first quarter. I am available for a free consultation to show you the changes that you could make to your property to enhance the value. So prices are up, that's a good thing. Now let's talk about days on market. People want to know, how long is it going to take for me to sell my property? Surprisingly, in 2022, it was taking on average 72 days to sell 4-unit building. We are down in this Q1 down to 64. 64 is in line with what we've seen in the past. We've been tracking this for now 7 years. And so selling a fourplex now, surprisingly, is going a little quicker, but that may not be the full picture. It could have been that some properties hit the market and they're dragging that average down really closely. I would have expected to see longer days on market, but that's not the case. That's not what the data is telling me, and I'm hanging my hat on the data. Now let's talk about inventory. So inventory is how many fourplexes are on the market at one time. Last year we had 16. In that first quarter, we're keeping track of this. If you were a buyer, you wanted to buy a 4-unit building, there were 16 to choose from on average. This year, we're up 26. So if you're a buyer, there are more fourplexes for you to choose from. If you're a seller, there's more competition, so not so great. In today's report, we have a little bit of a mixed bag of information. Less sales, but the average sales price is up. They're selling quicker, but now there's more competition. So what to make of all this? Well, here's what I'm going to say. Everyone is in a different situation. If you own a fourplex, you know that your loan is not going to come due because you got a 30-year loan. So you're not in the predicament that we covered on a different video on 5 units or above. So you're in a good situation. Most tenants continue to pay. And at this point, most sellers are not under any pressure to have to sell. And I know that investors hate to hear that. Because here's what I'm going to tell you. Right now, what I'm seeing is that we're at a complete stalemate. Buyers want to buy, but they want a bigger discount. Sellers do not want a discount. That's still the case. We're at a stalemate. Something's got to give. One thing I know, because I have this conversation every day, is that there are more investors with money and a lot of money wanting to place the money, meaning that they're not making any money sitting on their investment. There's more investors. There's more investors than there are sellers willing to drop their price. Now, with that being said, if you are a buyer, there are going to be unique situations where a seller simply tells their agent, tells us, or another person like me, I'm ready to sell, what's it going to take? And in order to move that quicker, they're going to have to lower the price and just beat the competitors out there. Again, competition is up. There's 26 fourplexes to choose from. So if you have any questions, I want you to reach out to me. Let's discuss your options. Maybe you want to test the market and see if you can get a certain price. But if you don't get it, you're going to pull it off. Perfectly fine. That's a perfect way to do it. You really stand nothing to lose if you want to test the market. Maybe you're in a situation where you want to sell. You're done with California. And believe me, I hear that all the time. You're done with California. I'm done with owning property in California. Get me out of it. That's going to be a different strategy, but everyone's strategy is going to be unique. The good news is properties are still selling. They're selling for slightly more than last year. So I hope you enjoyed this video. Make sure to like, comment, and subscribe. Until next time.